Hey everybody, welcome back to an episode of Record of My Father. Today we're going to be talking about stocks. You've had a recent win, haven't you? What?
We also
Right.
got to tell people that if you look over your left ear,
Yeah.
that you can see me waving over
Yes.
there because we're back together again. We haven't been together in 5 months, 6 months since
Is that true?
Moab. We did one together then, and now we're back
That's
again to
not
do
true.
it.
We went to New Orleans.
Oh yeah, you're right. New
That
Orleans.
was
I can't
like,
remember things. I'm old.
what was that, February?
Oh, yeah, I think dementia set in and told me it was February.
It does seem pretty active these days.
Yeah, who me? The dementia or New Orleans?
All of the above. I would
All
say
the
all of the above.
above. Okay, that's good that we're straight in the line here.
All of the above.
Uh, Stocks. When you think about, we wanted to talk about stocks because I for some reason, like a roller coaster, I get interested in things and I'm interested in them for a while and then I run away from them. But for pretty much my whole life, I have invested in usually mutual funds and occasionally in stocks when I was not actually working at a company where I would get inside information. I've worked at companies. When I worked at my first company, we would know that a particular company or was going to be purchased. So, because we would have like the M&A group from Skadden or Cravath or one of the major law firms would call us and be looking for examples for like a particular type of merger in the railroad industry. And, you'd already know that there's a hostile bid. We want a leverage buyout in the railroad industry. And it's like you knew, if you knew anything about the technicals, that you would know that they were going to do a counter and offer a significantly higher price. So you could have actually bought the stock. But that used to be against the law. It doesn't seem to be against the law anymore for certain people. But that's another story altogether. Anyway, I invested, I think, oh my gosh, it was like Adams Fund or something like that. And like 1990 was one of the first funds, or 1988 was one of the first funds I invested in, and I put $1,000 in, and I'd saved it and put it in, started the thing through there, and that's been great as far as over time returns. Same thing with like later, I did Vanguard. I worked for a company that had a 401k. I invested in not in stocks once again because I worked for Intelligize at that point, and we got information on insider trading. And you say, well, stocks you bought wouldn't have been through insider trading, and you're correct. That's true. I wouldn't have cheated, but all I had to do was like, hey, I'm going to buy Clorox, and then what happens? Well, the Clorox gets a bid, then all you got to do is accuse us, and we would have been dirty. And we didn't, and we never, the little bit of money that you would have made by insider trading, or and even if it's hundreds of thousands of dollars, the business was worth millions. So it would have been risking a bunch of cheats for is just stupid. But anyway, more recently, since I've retired and gone away, I've been more active in the stock market. I bought stocks and just been kind of like, wow, this is cool. And it's really kind of neat to talk about the wins. And it's funny when you buy a stock. And I was just talking to Zach about this. I said that you buy a company like I bought Clorox the other day. I think Clorox is going to it's the perfect kind of company. It's devalued a lot. It's products and certain products that they own. Every person in the US buys and uses on a daily basis or a weekly basis. It's something that Berkshire Hathaway would look at and buy. They buy those brands, and that's a great brand. I would expect them to do something. It's 30% or 40% below what it was, and everybody's downgrading it. So, and usually when everybody pisses on a stock, that's when Berkshire moves in. So, my expectation is they will move in and buy that company for a significant premium. I bought an 850 or 89, something like that. And for some weird reason, it just started rising. And the thing about stocks is that now it's risen to 92 or 93, and I feel like, oh my God, it's a great win. And in reality, it's nothing. It's nothing. I mean, because until I sell, I haven't done anything. I just bought. But it makes you it gives you this feeling like you did something smart or whatever, you know. And and believe me, from someone who's been in the market and seen people in the market, a whole lot of it's luck, or you got to figure out a way to cheat. you know.
Just different phrasing too. They don't really, it's not that complicated. It really is not that complicated of a thing.
No,
People want to make themselves believe that they're financial gurus, but it is
right.
not that difficult of a thing to
No,
really understand that you own a piece of a company and that you are a shareholder. And that with all these words that these financial gurus say, they're just meaning to kind of seem a little pompous, a little arrogant, I think. And that is the way they don't want normal people understanding how to do it because then everybody has access to it, you know. And I think it's entirely controlled in a way too through
if you
these large corporations.
if you look at the rise, okay, up until the late 70s, the all your parents, all your grandparents, and the majority of people had something called defined benefit plans, which big corporations set up pension plans for all the people that work. They worked there for 20 years and then they retired and they got paid that way. And those plans were guarded or internally and they invested in things that they invested in. So there's no need for public interaction in the stock market. The stock market happened when all of a sudden we started turning over our money, saying, okay, I'm no longer going to give you a pension plan. I'm going to give you 2% of your income or 4% of your income annually, you know, if for what you put into this little fund. And as long as you work here, that can grow and you decide what to invest it in, right? So once you hand it over to people that, hey, I'm an iron worker, I'm this, I'm that, and the other, it's like they can either learn about the market, which they're experts in the iron business, or they're experts in plumbing, or they're experts in even, you know, pizza making businesses, syndication, all this kind of stuff like that, but not in finance. They have this idea that somebody that comes in as a broker knows more about the market. But the brokers, in my experience, uh, rarely beat a general fund. I've seen this over and over and over and over again. Go in and just put your money in the Vanguard 500 or the Vanguard World Fund, where they invest a little. They have an index and they take whatever your amount is and they distribute it across all these different funds, and that gives you overall the best return over and over and over.
It is
You
kind of
know,
interesting how many industries are created out of a lack of self-confidence
well,
for oneself. Isn't that interesting? Because if you
and it
think about
grew.
wealth management as well, I mean, the
That's it.
same kind of deal. It's the
That's
same
what I'm
kind of
talking
deal
about.
where it's a lack of self-confidence, even though you have either created this money or are linked to some sort of wealth. You distrust yourself in such a degree that you need this random person to, I don't know, give you 5 to 6% a year or
Well,
something like that.
if you look at the GDP of the US in the 70s, finance was under 5%. Today, it's over 25%. So what's happened is you had these people that are now taking a fee and then putting it into a fund, which is taking a fee off the money that you earned, and so you're getting double feed, and they're not beating the averages. They always say we're gonna beat the S&P average, and it's like, well, why the fuck would I hire somebody if you can't beat what's an average? I mean, most of them lose, and I remember seeing in the late 80s and the 90s. I was an avid reader of the Wall Street Journal, and they used to do this random walk, random test where they had the five best in brokers or three best brokers in the country would pick stocks, and then they had the dartboard, and the guy would put the stock, all the stock symbols up against the wall, and he would throw darts at it, and they would buy those stocks. And those stocks consistently beat the brokers. So you're like, so I pay you 1%. And don't think about it. Think about 1% in terms of uh, 1% of 100 is $10. No, that's 10%. 1% is a dollar. And you don't think like a dollar of 100. So $100, $1,000. I mean, you really start to, if you put 100,000 in, you're now talking $1,000 of your money every year forever. It hugely impacts the overall gain that you get. And there's a reason that brokers have a really good financial life if they have enough customers that they're drawing a half a point off of or 1 point off of their assets over a year, because it's incredible amount of money over time. It really is, and you can do it yourself, you
Oh,
know.
definitely. You definitely
And
can.
you don't have to be Mr. Smarty Pants. I've talked to people, but I think there's a fear that you're going to do something wrong,
Or that
right?
you're going to lose absolutely everything. That's number
Right.
one. Well, there was somebody that I remember when I was in middle school was a mom to I can't remember who it was. Well, I won't name names actually. That makes more sense. But was talking about how they lost 25% of their net worth on mutual funds. And like, how is that even possible? Like,
Well,
I don't know. I think that that's a
okay.
really interesting
There was something
concept.
called Black Monday. It was 87.
Well, this was in 2015, so I don't know. Maybe they were talking
2008.
about, yeah,
2008, there
maybe they
was a
were talking about
crash.
2008.
I lost 30, no, 28% of my invested monies in 2008. So
Oh, well, there
that
we go.
means that if you had a dollar, that all of a sudden you had 72 cents, only if you cashed out. But then you also realized when you put the dollar in 5 years ago, it was a quarter, and now it's a dollar. And you're like, you're counting it as a dollar, even though you put 25 cents in. So you look at it as a dollar and a dollar drops back to 72 cents. And you're like, well, actually, originally I put 25 cents in. So I just haven't made as much. So it's really, really hard for people to reconcile the whole idea that for some reason, once they see a gain to a point, a senior point, they will never believe that that isn't the point that they got to. It's a very weird way. And then if it drops 5% below that point, they'll believe that they lost money. And in reality, they didn't, because you don't lose any money until you sell. Nothing. And if you bought at 10 and the market goes to 25 and you sell at 20, you still made 10. And you got that thought process is something that's very, very difficult to teach to people. You see it in options all the time, where people get options in a company and they're like, as soon as these are vested, and then halfway through, before they're vested, the company's worth $10 million or 50 million. We got a $50 billion valuation. And then all of a sudden, before they go public, they go bankrupt and they tank, and then
Sounds
they're
like
worth
WeWork.
zero. And
Yeah,
then they think they
WeWork.
lost 300 million, when in reality, all they did was they lost the price of whatever that option was. So it's an interesting way to look at it. I mean, and I think that if you put money in the stock market, it should be part of an overall portfolio. I think that now, just I don't have any money in bond. Well, I do. I do. I have probably I'm heavily invested. My money's heavily out of the market because I feel like we're in a bubble right now. Three-quarters of it is on the sidelines, and the sidelines for me is I'm in the Vanguard Federal Money Market Fund, and it makes about 4% a year, which,
Higher than a
you know,
savings account.
yeah, it's great. And then there is CDs that I buy I do some like a quasi ladder portfolio. And a ladder is basically you buy a 1 year, a 3 year, a 5 year, a 1, 2, 3, 4, 5 CD. Say today I buy a 1 year bond, a 2 year, a 3 year, 4 year, 5 year. Then you could call a CD a bond in essence, but it's more guaranteed and less volatile and all these. And you're going to get the principal back and all these things. But anyway, a CD, if I buy all of them at the end of year one, I buy a 5 year CD. At the end of year two, I buy a 5 year CD. At the end of year three, and so that regulates interest rate volatility. So if the interest rates go up, you're getting it at a higher rate because you got 12 months until your next one's up. And so if you think like that, and you're like, "Yeah, that's the best way to invest in bonds." Now, bonds have been shit. They have been shit for a decade. The market has been nuts. Now, one of the things that you always hear and always proves to be correct is the market goes up, 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 and then it has an adjustment. And the adjustment is a fucking crash. You know, I mean, when you think that people took almost, they took a 28 or 30% haircut uh, 12 years ago, 15 years ago in 2009, just wiped them out. A lot of people. So if you're borrowing to invest, you really get it's a you get doubly hammered. But for the most part, it's like if you put your money in, you leave it in there until you need it in retirement. You use a little common sense that if you know your expenses are coming up and you know there's volatility in the marketplace, you have to set money aside. You have to sell your winners, or if you're coming to tax time, some people, do you think your losers are really going to recoup? I mean, I always do this every year in December. I look at where I'm sitting. I look at the stocks that I purchased throughout the year, and I say that one has done shit for the last 3 years. It's time to get out and take the loss. And then I will use that as a write-off against other taxes. It's not, it gives you it gives you a, when people say write-off, whatever if your income's $1,000 and you lost $3 or $100, you get $100. Your top line gross is $100 less. So it's not dollar for dollar, a break. It cuts your tax rate. It cuts your tax rate dollar for dollar by whatever the percentage of your tax rate is. So and I hope I'm not being too complicated. Am I being too complicated?
I don't think so. I think that no, it makes sense, and I'm glad you brought up the ladder portfolio earlier because I think that that's one of the easiest ways and low risk ways to make money going
Right.
forward. But I think as well the story that I was talking about before about the woman that lost 25% of her net worth in
Hmm.
'08. I wonder what would happen if she had just had left it in and didn't sell. But a lot of people are wondering,
Yeah.
well, is this the worst it's going to get?
Right.
Is it going to get worse, and am I going to lose a
Well,
lot more money? But you should
you
never invest money that you want liquid in the first place. So, I mean, but
right.
are you willing to take such a large hit that the money that you didn't have liquid is now
Timeline.
kind of going into the money that you are wanting and needing, to pay off these
Right.
gross debts? Yeah,
So then you're forced to sell because remember,
exactly.
you never lose anything until you sell. Right. When the market dropped in 2008, I'd already taken out. For some reason, in 2008, I took about 40% off the table, paid a shit ton of taxes, took it off the table and put it in bonds or CDs. And I'm not a bond buyer. I'm more like a CD buyer or a high interest rate fund. But anyway, I for one of those rare times that I actually made the right decision, and I didn't take as much of a haircut, which I would have taken a much bigger haircut if I'd have been in the market completely. And I had a lot of friends that were, but most of them, they're in their 50s, and it's like you're not retiring for 12 years. You're not grabbing that money to pay somebody college education. If you were planning on that, you would have set it aside before, you know. And so it's going to bounce back in 10 years. And it did more than, I mean, it's tripled what it was then. So all that money, if you would have taken off the table, you would have realized the loss. You would have not gotten into another major bull market. We've seen this over and over and over that after a substantial crash, generally the world comes back. They come back to reality thinking that, oh, we're going to invest in, we're going to take the companies change their direction. And that's happened since the stock market began. And we're going to see it happen again. We're going to see another crash.
Well, I'm wondering
People
if
are,
people also thought in '08 if it was going to be like 1930 again, where we had the Dust Bowl and these
well,
people were basically starving to death.
I don't know. I would say that the people that are in the stock market that I put the money in there that they don't need on a day-to-day basis,
Non-liquid, yeah.
they would live through the Dust Bowl. The
Those
people
people would, yeah. Yeah.
if you have a substantial portion of the country, and the thing is, when we talk about the stock market, I think only 10% of Americans are invested.
Yeah, it's something like
So
that.
so we're
Something
not
really
talking
low.
about, you know, 90% of people out there are like, yeah, when I can pay my rent, then I'll, you can't get in the stock market if you're paying your rent. You can't get, and
Uh,
well, I would tell people, I don't know how to do this. I mean, because when you have discretionary income, if you ever have discretionary income, if there's a little bit extra, that is the time to, that's your rainy day fund, for an essence. And that rainy day fund, a good place to store it is in the stock market. So it'll gain value. That's the theory,
yeah, what is it? 75% of Americans live paycheck to paycheck, or is it
Yeah, and
higher?
if you
It
don't
might
live
be
paycheck, if you're
higher now.
paycheck to paycheck, all this to you is just bullshit. It's fuck off, rich guy. I can't afford to do that, and I understand that. I was on that side. I was on that side for 27 years. So I ate those. I ate the bologna sandwich. Mustard was extra. I used to bring the ketchup packets home, so I had ketchup for my hamburger that was, hamburger-like product. And, I mean,
Going
uh,
forward, do you think something like Enron could ever happen again, where you
yeah,
have a
absolutely.
gas and fuel market, an ulterior market where you can trade supplies like that? Do you think that
Well,
that
you
would ever
see,
be something that isn't considered a giant scam like Enron was misleading their investors? Do you think that that
right.
would
Well,
actually be a
they
pertinent
they
market and would actually exist?
they pursued fraud. They truly there are things that are impactful. Like we had a crash in 2001. That was they called it the end of the bubble. One of the things that precipitated the crash was a company called MicroStrategies. MicroStrategies stock was crazy. The guy that was the head of it, Michael Saylor, multi-billion, $14 billion, just as was going to give $100 million to an educational institution to start to teach people to be blah 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 blah, whatever the case may be. Well, they were doing something called pulling earnings forward to hit their earnings numbers consistently over time, which we in accounting standards it's called using cookie jar reserves. And they were cheating, and they got caught. And when they got caught, the price of their stock went from like, I don't know, I don't remember the numbers. It's 300, 500, 1,000, something like that. And it dropped as low as seven. So that affected the whole marketplace. That was a big crash in '01. There was a big crash in '08, '09. There was a big crash. I remember I went to work for a trader on Black Monday, that 10/19/87. My first day was Black Monday. And I remember calling the trader because I was finally working for a Wall Street firm and calling the desk, and they're like, fuck, it's a free fall. Who gives a shit? That's how they answered the phone because they lost a third of their money in 2 days. There were people that jumped out of windows in New York. There were firms that they did business with that were no longer there the very next day because they traded on borrowed money. Can you imagine if you borrow $1 million and you put it in the market and you lose a third of it? Guess what happens?
Gosh.
You're way underwater.
Oh
And
yeah.
but those people that ran away on that day and didn't come back, guess what happened? They missed one of the larger bull markets that we've seen in the last century. Same thing that happened in 9/11. 9/11, the markets they fell 400 or 500 points. They could not keep up with the trades. It's just so interesting to see how it's played out over time. You know, and it's weird. When you talk to people about buying stocks, we can all talk about ours. I mean, Clorox is doing well for me today, but in a week or two it won't. Who knows?
Well, those people in
Uh,
85, you know what they missed? They missed the 300% increase in Halliburton after 9/11, you know? They missed
yeah,
that, you know?
yeah.
Shout out Dick
Why
Cheney.
did that happen?
I wonder why. They
Well, you see,
definitely didn't know that the towers were going to be hit. No way.
well, you
No
see
way.
today, the S&P 500, if you buy the index, which is trillions of dollars in money, they buy that 500 stocks, a basket of them, and they're weighed on the market cap of each firm, like how big it is. Well, but they also have a few other criteria, which they happen to waive, which has got a lot of people angry today because they're putting SpaceX in it and they're going to put these other two big AI companies. Right now, when you buy let's say you use $1 to buy the S&P 500 index. You buy an index fund, you put $1 in. 8.7 cents of that dollar, almost 9%,
Nope.
almost
There
9%
we go.
is used to buy Nvidia stock. Okay? 9%, almost 9% for Nvidia. Do you know when you put in the other three companies, the tech companies, it's going to be Broadcom, SpaceX, Nvidia, what the hell, OpenAI, I think it is, or AI Open or something. And there's one other. It's going to be 43% of the index. So every time you put $1 in, 43 cents is going to go to four companies.
God, I was
Think
looking at the
about
Broadcom chart the other day. The Broadcom chart is crazy right now. It's absolutely
think
insane.
about think about the control that would give you if you were in that company and you wanted to make the share price go up or down. And if you made the share price go up or down, the index would go up or down. So you're now having four or five companies that are control a whole freaking index. Do they have meetings? I mean, to me, that is like an amazing opportunity for collusion and trillions of dollars in money made because a lot of money is traded every single day through those shit companies, hundreds of billions of dollars. And so I see that is a opportunity for fraud, and I see the Dow actually caving to SpaceX and putting them in before they even have earnings, before they have, before they're seasoned. They're supposed to be in it's like 6 months or 9 months before they actually add them to exchange. They're going to add them 5 days after they go public. And when you say, well, what's the big deal when you put a company's stock into the S&P 500? Every single fund out there that has anything relationship to the S&P 500 and buys that index, which is $10 trillion, every time a stock gets put into it, the stock price pops really high because a ton of people buy the stock. And if you know anything about supply and demand, a lot of money chasing something makes the price of that something go up every time.
Well, I'll ask you a question about that along the lines.
So that's artificial.
Jersey Mike's going to IPO very,
Yeah.
very soon. And I think they're in
Yeah.
the pre-sale stage. What do you think about the acquisition that BlackRock did on Jersey Mike's? They bought Jersey Mike's recently, and now they're going to IPO. Do you think that, I mean, what do you know about restaurants and
I mean,
restaurants that go to IPO in the past?
the ones that I've seen, Chipotle, what's that pizza? Grottos,
Grotto's went to
Boston,
IPO?
but yeah, Boston
Really
Chicken,
interesting.
but a long time ago, Boston Chicken, uh, a lot of the bigger companies that go and spread. Fleming's is part of a restaurant group that's owned by, oh God, I can't
It's
remember.
not the big
There's,
American restaurant chain, is it?
you know, yeah, I think that's it.
No,
No,
dude.
that is owned by them, by this company that's trades. And usually, what I see is that there's an initial amount of hype. They take their restaurants and they spread them across the country as much as possible. And then all of a sudden they overextend and then they have a crash and then private equity comes in, BlackRock comes in, buys them, sells off the restaurants, leases the land back to them to BlackRock themselves. They get fees for that over 4 or 5 years. They make the income statement and the balance sheet look a lot prettier now because there's no, there's a big chunk of debt over here, but they no longer have restaurants that aren't making, you know, 2 million a restaurant or 1 million a restaurant or whatever the case may be. And then see what it is it's a loop. You see the loop. And so what I would expect is you're probably going to see a pop of the price the first few days. It's going to drop and it's going to be stagnate. And then in 3 years, Jersey Mike's going to be bankrupt. That's my call. It's gonna go out because it's not exciting.
We just saw that with Red Lobster too. Well, you know what's funny
Right. And expansion isn't there. I mean,
is the
who the
news
hell else are you
about
gonna go?
the acquisition is already saying that they cut the product in half of Jersey Mike's and how they're already making the product worse, which is the sandwich, right? People are always
That's what they
saying
do.
people are saying currently that the meat that and cheese that are put on the sandwich is far less than what it, and there's like before and after photos. And
Right.
that's really interesting, I think, to just
Well, that's
kind
what
of short
private
this
equity
product.
does.
Yeah, but at the same time, I can't imagine, selling something that you've worked your entire life for. Just, I don't know. Isn't that kind of interesting? And you know that it's going to be destroyed at the end of the day. This thing that you grew to a multinational chain.
I
Is
mean,
it is it international? It's not international. I think
you
it's just
mean you mean
national.
like global securities information, huh?
Yeah, in a very similar way. Yeah, no, in a
Yeah.
very very similar way.
Intelligize. One was 18 years and one was 10 years, and we watched them grow to a certain bit, and then we handed them over. Intelligize is still around. Global securities information disappeared in 2 years. Within five, it was from librarians, not from me, not independent, was the most horrible destruction of a private company by a large company ever in the legal tech industry. They took the price of the product and they raised it from two to $16 a minute in 4 years. So all they did was add the price. They didn't change the product. They changed the interface by making things more colorful and more weird, and they changed the name so people would get
Nice.
the new company name on there, and people just said buy, and they moved. And then I jumped onto another company that was in the startup mode. It was like a year and a half in, and they we ate their lunch along with a lot of other lunches, and grew big and sold it again in 2016. And I mean, you see it, you know, once you sell it, uh, it's going to flatline because they're going to want to make a profit. And see, when you're growing a company, you're not looking at how much money you're going to make. You're looking more at how you're going to grow it and all these in a positive way, which is a different animal. I wasn't looking for, every $10 new in revenue was, 42 cents in my pocket. So it's like, but I didn't look at it that way. I looked at it more of a stability, you know. But you get, there's a size. I mean, for me personally, that's when I see the people at the large companies. You lose the connections that you have when you're a small company. But I don't know how to stay still. I think I couldn't start a company, and I mean, I talked to people that wanted me to come on board a company, and I was like, so we're just going to raise profitability. We don't want to grow the company. Don't want to sell the company. I'm like, I don't, I don't know how to do that. I don't, I can't run in place. I need to run forward. You know,
Yeah, I've met people that just want the small
status
business,
quo.
want to keep it small, but at the same time, those people aren't even turning a profit yet. And they're like, well, I don't want
Oh,
to
these guys are
grow.
making tons of money.
No, no, what I'm thinking of is individual business owners that own a small business,
Yeah.
and I don't know. I've met many a person that just wants it in a certain way. They don't want to work too hard, and I think that that's funny that you want to own your own business and not work too hard. I don't know. I don't think that's really possible.
Yeah.
I think that it's either
Well, if you
you're
want it to be
willing to
better,
work for it to turn a profit, or you're
you're
not
always going to
willing.
have to do more, or you're going to find more people that will do more. I mean, I look at like when you look at success stories for restaurants, look at Five Guys. You know, that is a success story so far, but they haven't sold it. You know, the
I will say
brothers.
the product has gone downhill
Yeah.
exponentially.
Yeah.
Gosh, I
Well,
ate
they're,
there recently. I was like, this is gross. This
oh,
is nasty.
I still like it. I think
I
it's an
was
unusual
shocked. It was
burger.
bad. Yeah.
When did you eat?
When I got back from Mongolia, that was the first thing that I wanted. And the
Whoa.
bun was soaking wet. And I was
Oh,
just
you're,
like, it made me want to, just thinking about it now makes me kind of gag, but
well,
it was
that
very,
makes you
very
think that they
gross.
use a cheaper cut of meat, more grease,
Well, yeah.
right?
Worst bun, too. The bun was just falling apart. I'm like, this is disgusting.
Yeah, so it's either the
And
bun makeup was a cheaper ingredient, because usually what happens when they grow, it's like someone comes in and says, "Hey, Zach, if we made your hat out of this material, it would save you 50 cents." And you're like, "Well, that's 50 cents times 5 billion, so that's 100 million billion dollars." And you're like, "Cool, that's that much more money I can do other things with." When you're in reality, the only reason I buy your damn product is because you make it out of that great material. And I think that we people forget, or they just don't care, and they think that, fuck the consumer. We're gonna water down the bleach. We're gonna water down the soap.
mhm.
We're gonna use cheaper meat cuts. We're gonna use crappier potatoes.
Yeah.
We're gonna use less this, that, and the other. We're gonna use cheaper ingredients in the lobster biscuits that we make. I mean, the lobster we're gonna make is no longer gonna be lobster. It's gonna be lobster and other substances. And Taco Bell went from, when they first were a Taco Bell company, which I love Taco Bell. Uh, uh, they were meat tacos, and
Sand.
now they're not meat.
Well, speaking of which, you know what really I'm wondering about, what this conversation makes me think so deeply about, is Long John Silver's a publicly held company?
My wife loved them. Arthur Treacher's, that was the one she liked.
Yeah.
Uh, I'm not a I see. I think that chains like that are they're basically uh uh they're a roller coaster.
It is
You want to
not
you
a
want to
publicly traded company. The chain is owned by LJS Partners, LLC, consortium of investors and franchisees after they purchased the brand from Yum Brands in
Oh, that's who I was
2011.
thinking of. Yum.
Yeah.
They're the ones that own Pizza Hut
Yep.
franchises
Taco Bell, KFC.
and KFC, and they do the triple, and they've done that for a while. And the foods, I mean, Pizza Hut used to be the best pizza in the world, and now it's just shit.
Well, KFC too is the most disliked chicken brand, I think, out of any of them.
Well, it used to be really good, and then all of a sudden, the
It's
chicken
really
started getting
bad.
no, the chicken got so small, and the breading got so big.
Well, it's
Be-
because the
you know why? It's
they're
cheaper.
well, they're coming out with these articles now about how in the past 5 years that they're just throwing live chickens in boiling water.
Whoa,
And the level of kind of the way they killed the chickens is very odd, I will
horrible,
say. Well, it's quicker, right? And it's as opposed to spending more time in a I don't know,
humane.
halal kind of way. Yeah, exactly. So it's kind of a lot of that is coming out, which I think is not doing too well. One, for their overall product, and two, for their kind of image.
I was always a Popeyes chicken lover anyway.
I love Popeye's chicken. I mean, the sandwich kind of, when the
Yeah,
sandwich came out, that is when we knew who won the war. You know,
yeah,
it wasn't the battle anymore. It was the
yeah.
war. And the
Well,
war was over
they
in
were a
2020.
distant third in the chicken battle until that sandwich came along
Crazy, right?
because they were spicier and greasier. I mean, you could not. We used to eat Popeyes downtown,
Mm.
and it was like going to the Dirty Water Dog Factory. You went there, and there was just you were a disgusting mess after you ate. You'd have to eat, and you would get 10 napkins, and then you would have to try to go to the bathroom to wash your hands without opening the door because then the
Yeah.
door was this sticky, nasty, gummy stuff. And
Yeah,
it's
it's always
like,
the why
oh,
is the door of every chicken restaurant sticky, the door handle? That is such a
because I
fact.
visit them all. That's why. And I
Uh,
don't wash my hands.
I had a feeling. But you want to know some cool stuff about Yum Brand. So they opened this year at about $144. They peaked in February at
Yeah.
162. Oh, sorry. Is that March? Nope, February. Yeah, I was right. $168 peak. And then now they're sitting at 150. Interesting.
Oh, so
Interesting
they're
kind
not
of
crazy.
chart for the last 6 months there.
Well, I was looking at Clorox and they were like 190 5 years ago. And now then they dropped to the 80s. I think it's the
Well, yeah,
80s.
pandemic must have just
Yeah. Well, no, I mean,
run it up. Same with Purell. I can't
yeah,
imagine.
I think that's part of the key, and it came back, and a lot of people in the last year have downgraded them because of the debt. They have a huge amount of debt out there, but I still think, and I'll reiterate it over and over, that they're going to be bought by Berkshire in the next 12 months. They're going to get an offer. Knock
You
on
think so?
wood. That's my
What makes you say
projection.
them?
They have all the attributes to what if Warren Buffett was still in charge, he would buy them. I'm assuming the
What
new guy,
attributes are you referring to?
uh, international brand. Everyone knows what a Clorox is. Everyone knows the
Yeah.
products that they sell. When you see any one of their, they got all these different what do you got? Home cleaning agents and aids. When you look at them, you're like, oh, you've got Swifter. Oh, you've
They
got
own Mr.
this.
Clean too, right?
They own Mr. Clean. They own
Yeah.
all these brands that are just like iconic and have been
Mhm.
around for 50 years. And this is the kind of shit
And they
that
will exist within the next 5 to 10 years, I
right.
imagine. I
And
can't
they cost
imagine
a
they
nickel to
wouldn't.
make and they sell them for $2. And it's like,
Uh,
wow, this is something that as long as they don't fuck with the ingredients, they will be continuous
which,
to
from what I
grow.
understand, I don't think they have. I
No,
don't think
they
that they
don't.
have at all.
They
Still
don't.
smells like bleach to me.
Yeah. I
You
mean,
know,
don't be a Coca-Cola. New Coke. God.
I don't understand how Pepsi's still around. I don't really
Yeah.
get that. We know which one's better. It's Coke every time.
Yeah.
You know what was funny? Somebody was talking about, those bars that you go to where
Yeah.
they only have Pepsi products,
Yeah.
and how somebody kind of blackmailed these bar owners into buying Pepsi. So that
Really?
there's like some Pepsi salesman out there that's blackmailing bar
Well, that's what
owners.
they
And I think
do.
that that's a great concept.
Well, if you're a bar and and a Pepsi guy comes up and you have a and Coke costs $50 a gallon, and the Pepsi guy goes, well, we're 45, and he goes, but for the next 5 months, I'll sell it to you for 25. And you're like, oh my God. Automatically in your mind, you're going, are my customers going to be as happy with Pepsi?
Nope.
Well, most of them are.
You think so? Really?
If you look at, let's pull up the studies, look at it. It's nominally different. Nominally different. If it was to significantly impact sales, Pepsi would be gone.
Let's
It's
see.
cheaper.
Yeah, it doesn't Gradas, funny enough that we mentioned Gradas, I think only has Pepsi products as well.
They may have not gone public. I wasn't sure. I thought they went public. They filed an S1 at the SEC and they never went or something. I was looking for them. I may have just been hallucinating because there was a number of restaurants that came out that were copying Boston Chicken. Remember Boston Chicken?
Significantly fewer customers and a smaller market share than Coke. Coca-Cola is the undisputed leader in global and domestic beverage.
Yes.
Holds roughly 19.2% of the market, remaining firmly in first place that Coca-Cola does. Pepsi has slipped to roughly 8% market share, falling behind both Dr. Pepper and Sprite in recent years.
Cost.
Interesting.
What costs more, Coke or Pepsi?
What costs more? I wonder what the actual cost is too.
That's the big,
That's definitely Coke costs more.
you would think.
Costs significantly more than Pepsi, yep. And if its dominant market share and stronger brand loyalty, Coke commands a premium and rarely discounts as deeply.
See,
Pepsi, there we go, frequently relies on aggressive promotions and retailer discounts to win over
right.
price-conscious consumers.
Bingo. There you go. They buy the Pepsi, and I'm like, okay, Zach's going to come in and buy my Five Guys burger, and he loves the burger. He'll buy a Coke or a Pepsi. I'll just give him a Pepsi, and I'll increase my margins. And then I don't realize that I'm chipping away at Zach's loyalty, and that's the problem when you go with a cheaper alternative. It diminishes the overall brand. Always does. Always has. You need to find better if you want to be number one. If you don't care and you're always looking about profitability and you're going to get out of the business in 3 years, basically fuck the consumer, right?
Well, I think Pepsi is generally more willing to negotiate with a smaller restaurant too.
Why would they be that way?
Yeah,
Because they don't have a strong brand.
exactly.
And think about it. If you're a restaurant, you've got one or the other. Except for doesn't Big Buns only have that root beerish type nasty
Oh
drink?
yeah, like the Jones soda or
Oh, that
whatever it
sucks.
is.
That
Yeah,
sucks
isn't that
ass.
interesting that so you know what I will say though is what was
It's
it?
cheaper.
District Taco. District Taco was another one. There
Yeah.
was a local DC and Virginia chain, started in Virginia, I think, in a food truck. And
Yeah.
then the first location, I remember me and you used to go when I was 14, 15. Absolutely incredible. As soon as they opened that second location in Tyson's Corner,
Yeah.
fell through the floor. It was terrible. It was
Yeah.
like as if they dipped the taco in water. I don't know what it was. It was very, very
They
odd.
changed you can't, that's the thing that Five Guys was able to do over time is they were able to copy exactly what they did over on King Street. I lived across the street from the original, and we used to hang over Sundays when you walk across the street at 11 o'clock in the morning. They opened up on Sundays, and there was a line 30 people long waiting at 11 o'clock to order Five Guys burgers.
Well, I think the key is very, very, very strict franchisee rules. That's
Yeah.
the only way
Yep.
that you have
Yep.
to do, and you
And you
have
gotta-
to enforce those by fines.
And
Very,
you
very
control the
hefty
food.
fines.
You control the food product. You can't buy your own. You got to buy my freaking potatoes. You got to do this. That also
Specifically from Idaho as well. They don't change location to location. It's always the same potato farm every time.
that can fatten the home guys' margins. The thing is think about McDonald's. They did the same thing. No one makes their burgers. No one does anything. They buy it all from a central location that's completely uber controlled by the guys in charge. And that's the only reason you want to be able to eat a McDonald's burger in New Zealand and Zimbabwe and Buenos Aires
The
and
difference,
LA,
though,
and it should be the same.
is the employees that are hired. Because man, I've been getting the last time I ate McDonald's, they just messed me up with the amount of Big Mac sauce they put on the burger. It was like a
I've never
kind of
liked
like a human fluid sandwich in a way. And same thing with the mayonnaise. They just
Yeah.
like, what the fuck is that?
Well, you know what the problem with McDonald's is
disgusting.
on the mayonnaise?
Too much
is
sauce. It's
they
just
have a
like,
gooper.
ugh.
They have the gooper.
Um,
and I had the chicken sandwich there, and they put a blob of mayonnaise in the middle. When I was
Yeah.
a kid, we used to make bologna sandwiches for lunch, and my sister and I were in charge of making lunches for the four of us, and because my mom worked all day and all this other kind of stuff like that. But when my mom made the sandwiches, there was a blob of mustard, just a pile in the middle
Mm,
of the sandwich, and but
yeah.
we spread it around before we put the bread on,
Yep.
and it was just like, because you're tired and you're making four sandwiches, and throw it on, done, right? As
Exactly.
opposed to, but if you're going to eat the fucker, you're spreading it
I kind
out.
of like my liquid spread. Yeah. No, I would
Yeah.
definitely say that. Oh
Yep.
gosh. No, that
Yeah.
was yeah, I don't think I that well I went 2 years ago, funny enough, because McDonald's did a rebrand for their Big
Yeah.
Mac and it was
Yeah.
phenomenal. Within the first week, or a month, I'll say, after it was not nearly as good. Not nearly as good.
Quality's a hard thing to keep
It's
because
always
people get
the first
lazy.
week after the rebrand, it's only good.
Yeah.
Then
Well,
that's it.
people are, I mean, they're weak. They're not consistent. And if a corner can be cut, they cut the corners, especially when it comes to profitability for the home store or the store being managed. This happens over and over and over again. We're talking about restaurants and we were starting out talking about stocks. Let's talk about another stock. I got one, SEX, copper. If you know anything about copper, it's used in all your phones. It's used freaking everywhere, and it's in all the
Shout out
data
to Will
centers.
Steinbeck for that one. Oh
Right.
my gosh.
He told you to get it, and I bought it originally at 67, something like that. And then it went to 78 or 79, I think. And I didn't sell. And then boom, it dropped 15 points. And it went to 55. And I was just like, well, I could have made, I mean, I was counting how much money I'd made up into 70, 61, 68, 69. I was like, it's going to go to 70. I'm going to sell it. And originally I said to myself, I was going to sell at 68 and I didn't sell. And it went to 69. And I'm like, yeah, it's going to go. Boom. I wake up, drop 15. The market fell out of the copper market for some reason. Trump threw a whatever.
Well,
Weird
it's the
things affect the market.
semiconductors, right? That's why it's booming so
But
so
then,
heavily.
but then it went back up and it went back up to 68. And I sold it like I said I would. And I made a pot of money. And then it dropped down to the floor. It went back down to 58. I bought it again at 58. And then it went back up and it's now at like 65. And I'm going to sell it again at 68. And I've seen certain stocks that behave
Red
this
Robin,
way.
you did. Yeah, yeah, you
I
did
did it
this to
with
the Red
Red
Robin.
Robin
Yeah.
for 4 cycles. I did it with Home Depot for 4 cycles. And you can make a lot of money as long as you're doing this. Now, the question is that when the music stops, you want to be in a chair. You, you don't want, you know,
Great analogy. I like that.
because I mean,
Or
Pfizer,
metaphor, I guess.
I did it with Pfizer. And I had bought Pfizer right at the beginning of the pandemic, and it was, I don't know, it was like 20s or so. It was really light, and then it doubled in a half, and I was like, oh, it's gonna go to 100. That was not gonna happen. Uh, I might have bought it in the 50s or something. And I bought it and sold it, and I made some money, and then I held on to it the last time, and then COVID ended, and so did Pfizer, and so for 2 or 3 years. I mean, it's been a bloodbath loss. And then I sold it again this spring and said, I'm gonna take my hit. I know I sold it last fall because I sold it right before tax time. I looked at it and said, I'll take the big hit and I'll take the loss, and that's good, and I'm done with it. And that's kind of the thing, is to get away with it. And of all this brilliant, beautiful advice about what you should and should not bow, I love Lowe's. I love, you know, I always go to, like, remember when I told you about GameStop? Remember your story? Have you ever told your story about GameStop?
Yeah, we did on I think 2 episodes ago when we did the finance episode. Go back and listen
Oh
to that one.
yeah, because that was, I mean, it was stock. That was like picking a stock about something that you understand it, and you believe in it, and but also having a rational thought that it's hard for a lot of people because they fall in love with it. Like people fell in love with Peloton. They bought a
Oh, yeah, that
Peloton
was
and then they
bad.
bought a bunch of Peloton stock. And I mean,
And the
any
Suez
any
Canal.
monkey, any monkey that was outside of the industry would have thought that as soon as people went back to work, which I thought it would change. I
Well,
kind of thought that it
was it
would
the
change for
Panama
more people.
Canal? What was the problem with the there's a distribution error on a canal where the boat turned sideways. Remember that?
Yeah.
And Peloton, I think, was directly responsible for that or something like that. It was crazy.
No, they wouldn't be stuck. That's
Mm,
Palantir. I'm
no,
talking
no,
about.
no. They were responsible, I think, because their shipping containers were the ones that were overweight or something like that.
Oh, I didn't
And
know that.
because Corey was talking about that, and he's like, "Yeah, like it's really, really bad. We're having shipping orders and errors because of that boat that turned sideways. What canal is that?
Well,
Panama
no,
Canal,
he
or
said,
was it?
but they no because they go through the canal.
But the boat turned
They were all
sideways, and
they
they had a bunch of orders on that boat.
oh, but they
Yeah,
also had they manufactured in California and it's being distributed, and they went through there to distribute all on the East Coast.
yeah,
And by going through the canal and getting caught, not only that one, but all the other ones behind were all caught. So
exactly.
they were clogged, and you were like, ah. And then, you know, you can't charge until somebody takes delivery,
What are you gonna
right?
do? Yeah,
So they miss their numbers, and when you miss your numbers in Wall Street and you're a hot stock going up, you get pounded. I mean, you get really.
that was longer than anybody thought it was gonna be too, if I remember.
Yeah. But
Because
they went from like, 9 to a million in 8 months. And then they went from a million to nine in like 2 months. So
yeah,
there's money to be made in both sides. I've never been a short seller, and I've seen how I could make money at short selling, but I've never been. You got to fill out a different form because
as
it's a
much
lot
as I
higher
like
risk and all
gambling,
this other stuff like
I
that.
don't
It's a lot.
believe in gambling.
Yeah,
I
I'm
just
already
don't.
gambling. You buy stocks, you're gambling. You figure out
Well, at least it's
that.
not the finality of it all is so much
Yeah,
less.
I
It's
know
not as
other people.
serious.
Other people have better information than me, and they can trade faster than me, and they can trade off of my trades. Okay, did you know that?
Yeah.
That there are a number of hedge funds that have direct lines to the Wall Street, the New York Stock Exchange, with large cables, so they see pricing. They see pricing at the same time you do. So I put in an order for 90, and they see that I want to buy a stock that's trading at 90.88, 89.90, 89 and 98 cents, and I'm going to buy it at 90. They will then buy that stock 88, 80 at 98. They'll buy it from a person, execute it immediately, and then they will sell it to me at 2 cents higher. And they will do 100,000 trades a day that way. So they will make 2 cents or 4 cents on every trade, or a nickel or a dime or a quarter or whatever. And those people are basically making me pay more. Any market trade is like that. Any limit trade is like that. When the price is moving fast, if it's moving up or down, and you put in a limit order, you can catch it. And a limit means you're willing to pay. I put in a limit order for 10. It means I'm going to pay 10 for the stock. That's what
Do you
it
ever
means.
do GTC trades, the 60 to 30, 30 to 60 day GTC
I've
trades?
I've done that for sells because
Sells.
I think something's going to drop tremendously, and I don't want to lose everything. And I'll cover myself by saying, okay, I own 10,000 shares of Bob Johnson stock, and it's risen 40% in the last 3 months. I'll put in a sell at if it falls too, like that kind of stuff.
Mm,
You put in your, but you got to be careful. You got to know it's a little
yeah,
more complicated, a little more sophisticated.
it
But we
sure
talk
is.
about the different things that you do in stocks, and I think that the most important thing is to get started, and no matter where you are, because the problem that a lot of people do, and I know there's a lot of people that like me that are in retirement, is they're looking at it now and they're like, I'm 65. I got to make up for lost time. No, don't. Do not do that. Do not do that. I'm going to put it all on black and double my money. I've done that, and I did. It worked. It worked once. The next time I put all my money on black, it didn't. It took it all away. So you you you
So find a good hat to wear,
yeah,
like the one
yeah.
I'm wearing. It
I'm gonna
feels
get a good
great.
hat. I'm gonna get a good hat for the next episode. I'm also gonna say that I think that as far as stocks go, you need time. You got to have time. You got to have time to let it go. You got to let it run. And if you know a little bit about it, if it's a brand that you like, if it's an REI or a, Pizza Hut or whatever the hell you like, own a little piece of what you think's
4 to 5 years.
good and
I
grows.
mean, I think that that's where
Gotta
you're going
be,
to make your
gotta be time.
most amount of money. 4 to 5
Just
years.
because you
Yeah.
want it to grow faster doesn't mean it will. And just because,
Patience is a virtue.
yeah, it's something you can't fall in love with the company and hold the stock even though the times are getting bad. Get the fuck out. If you don't think there's going to have an opportunity in the future, don't lie to yourself. Be honest. It's your financial health, right?
Destiny Inc. was that for
Yeah,
me.
it's the number
Destiny
of
Inc.
burgers that you can buy tomorrow. I can buy two burgers at McDonald's because Clorox went up today instead of just one. And that's what the world is all about. Eating two burgers. I love that hat.
That's true.
You know where I got that?
This was in Peru.
Yeah, on the Inca Trail.
Peru, Peru, Peru. You
Yeah,
ever
the
hear that
guy
song?
that one of our guides was selling those hats,
It's
and he
nice.
had the whole like he had the brim hat, and he had dangles hanging down, and he had the what are those things called?
I
The
wonder what the dangles are for, like these things,
I
the
don't
throw
know.
things.
I'm guessing he could have told us, but
Because it's
you
not like a
know,
hat that blows off your head, right?
we did we had the shaman on the trip, and
Uh-huh.
he actually smoked. We had the cocaine leaves, right? He picks those, he lights them on fire, and he blows the smoke in your face. And then it's something about the earth, the sky, the water, and the land, or something like that. It was some thing, and we're at the top of one of the. There's like a three mountaintops that you walk to get to the. If you do the Inca Trail and you go into Machu Picchu,
I want to do the Dolomites in the Swiss side, not the Italian side.
I in my lifetime, I would love to go back to Kilimanjaro and do the 9-day trip. That's something I'd love to do.
Have you done the Dolomites?
No, no, it's
That might be one of the
I've
next ones.
seen some of the.
Don't go in August, apparently,
No, but
because
I've
that's the
seen some of the
celebration time.
mountain trails that you travel on, and I would poop in my pants. I would freeze. I was on Machu Picchu. We went to the top of Huayna Picchu, and I was, 9/10 of the way up, overlooking Machu Picchu, which was 1,000 feet down, and I'm 6 feet from the edge, and I am frozen.
It's that Creed song. It's I'm 6 feet from the edge, and I'm
Yeah,
thinking
scared to death. I do not like heights. That's why I climb mountains, right?
there's that one in China too that like you do the walk and it's like pegs that stick out of the side of a wall,
I No, that's
and
nuts. I saw that
I think
too.
it's like 2,000 feet down, but
Yeah.
you're hooked in though,
Well, we
so it
did
doesn't
Mount
really matter.
Semetai, which is a big one that a lot of people go to in China.
Uh,
It's native Chinese do the Mount Semetai walk because it takes you back to your ancestral
are the
land. You walk.
stairs? Is that the one with the big
No, no
stairs?
stairs. You're walking up
Oh,
through the brush of the mountain. You make your own trail. It was
I'm thinking of this temple that has stairs
it
in
was
the middle
interesting.
of
That's
a.
where your uncle said he was going to die like 7 times. You
Uh,
know,
was that that was the bridge, right? When he was on the bridge.
no, no, the bridge that scared us all to death. And but he was walking. You know, he drank like 8 quarts of water and he stopped. I'm okay. No, you're gonna die. You're not. We're not leaving you here. Leave me here. Come back. No, we're not. We're not. You're gonna go back.
Did he lose a lot of weight on that trip?
Probably until we got back to the hotel and we moved hotels because the hotel we stayed at was just it was just it was just a piece of plywood on the
Yeah.
floor that he slept on with straw pillows. And we're like, no, we're not. We're gonna upgrade. And we offended everybody, I guess. And we went across town and stayed in a really nice hotel. And he immediately went downstairs. What's the biggest steak you got? I'm like, didn't you say you were going? Yeah. It's lasted like an hour. Well, this is just after the trip. And I'm like, no, it's not. This is what you do every day. But, you
We are
know,
creatures of habit, aren't we?
yeah, we do
Uh,
what, when you're trying to figure out what's going to make you happy in life, if something makes you happy and it slowly shortens your life, is it better to have a shortened life that you're happier with, or is it better to mindfully deprive yourself and live longer.
That is true.
And that's the age-old argument. It's always there. And the question is like, well, how much mindfulness of deprivation do I have? Like, I can't eat anything other than broccoli, or I can't.
Well, there's very few people that I've looked at that are in their 80s that I would want to live that long. I'll tell you that much. I don't know, but I feel like
I don't
with
know
each
anybody.
generation, it gets better. You get more longevity, but you're maintaining your health longer and you're more active, right?
I know people in their 60s, and now I know people in their 70s that I would be happy to be in their physical shape. And
Really?
that's yes. But I
Oh.
know people in their
What about
80s that
well, yeah, what about
I
their
know
80s
no
though?
one
Yeah.
in their 80s, and I have not ever known anyone. No, my grandfather was 86, and he was still driving a car at 84. He got a new car every year, and he was chubby and fat, and he delivered the mail every day and all
That's
that kind
cool.
of stuff. And he was bald, and he smoked like a pipe and cigars
Oh, that's
every
nice.
day, and drank the water glass full of rum, which was the funniest thing,
That's a lot of
before he
rum.
drove. And you're like, really? And I was
They're
like,
always
yeah.
narrowing the roads around here.
And that was so
Yes.
bad. Pint of rum for breakfast. I don't know how you do that.
And on
That's
an empty stomach too. That's
on an
impressive.
empty stomach, straight down like a glass of water. I was just like, wow, I guess that's what the Navy does for you.
Runs in the family.
Yeah, yeah, we're all a
Gosh.
bunch drunks. We love that.
Well, on that
We're
note,
late.
thank you guys for
Uh,
listening. As always,
we want to hear stock tips.
we want to hear stuff.
Anybody?
Please, that'd be great, actually.
Tell
Yeah.
us,
If
tell
you
us,
have
give us
any,
one. Tell us our ideas are wrong. I'm going to go back into FTX if it drops below 50. I'm below 60, and buy it again because I think it'll ride up again. And it's dropping 5 today. I'm gonna hold on to Clorox until probably 100 or near 100. Then I'm gonna run away. And so that's where I'm at right now. And I got a bunch of other little ones that are here and there. Uh, always willing to hear. Always willing to listen.
yeah, comment those on our page. All right. We'll talk to you later. Bye bye.
Party on.